Today we're going to talk about a bad credit mortgage. At what point is credit bad? Well, these days most lenders, whether they're banks, trust companies, credit unions, most institutional lenders treat the beacon score as the, way to indicate if somebody has bad credit. Somebody has a beacon score lower than 600, most of the institutional lenders kind of back away from those deals. So although there are other indications, somebody may have a beacon score that's, higher, but they do have some problems, or it could be the other way around. Their beacon score is lower than 600, but, they have some redeeming things like maybe long-term good credit before, you may be going through an event or something, a separation, and, may cause a temporary form of bad credit. But overall, it's really the beacon score that they look at first. Private lenders are a great source for people with bad credit, and I'd say, because private lenders just get down to the basics. You want to borrow money, you're going to put up your property as collateral. What is the equity? Do I feel secure that I can lend you money and I'm going to get my capital back? So when most people are borrowing money, that's kind of the way the borrower thinks too. Why can't I borrow this money? I'm going to pay it back, and you can have my house, and I have lots of equity in my house. So private lenders kind of think along the same lines. So it's very good, for people with bad credit. I wouldn't really say that bad credit mortgages are expensive. They tend to be a higher rate and, a more of a cost than a regular type of mortgage, people with good credit that qualify. But I wouldn't call it, expensive. It's value for what is offered. Somebody has bad credit, okay, you can't go to an institutional lender, fine, that's okay. But there are some advantages to private lending. So I wouldn't really call it expensive. It's going to be a bit more. The rate's going to be a bit higher. Your payment might be a little bit higher. Sometimes it's not much higher because usually we do private mortgages at interest-only payments. So payments aren't usually the problem. As long as you have equity, we can do a private mortgage, and it's not that expensive. Well, to decide whether you should refinance your existing first or whether you should get a second mortgage, we really need to look at the whole picture. A good point is if you have a very good first mortgage at a very good rate and you may just have a temporary problem with your credit, it might not be a good idea to refinance that first mortgage. When your credit's bad, it's difficult to get, the best rate out there, for instance. So, but if your credit goes back to being fairly good, again, we can lend money, we can borrow money from, these sources of business. So sometimes it makes sense to do a second mortgage instead of refinancing your first mortgage. Again, when we're looking at a bad credit mortgage, equity is the most important thing. So what would cause you not to qualify? It likely comes down to equity because there's always a price with a private lender. As long as you have equity, so let's say, for instance, that you have really bad credit, maybe you're a former bankrupt and currently you owe a lot of people money, a private lender will still give you a mortgage as long as you have the equity in the property. So that's the most overriding thing. If you need more information, give me a call or send me an email. If you get my voicemail, leave your name, number, best time to call. Your call is important to me, and I will call you back. Look forward to speaking with you. Take care.